End of summer financial planning. Set up your Q4 success. Summer's ending, which means that Q4 is coming fast. And for most startups, Q4 is make or break time. And this is a quarter that determines if you hit your annual targets or need to scramble for more runway in January. Here's how to set up yourself for a strong finish. How's it going? My name is Eric and I'm from the Cashflow Doctor. I help tons of startups navigate Q4 for financial planning. The ones who prepare now will finish strong, and the ones who don't, well, they become cautionary tales. First up, let's talk about revenue planning. Q4 I found is typically weird for B2B sales. Usually what I found is enterprise deals often accelerate because of year-end budgets. But also, holiday slowdowns can kill your momentum. If you're a B2B SaaS company, review your pipeline conversion assumptions and account for seasonality. You will want to factor in holidays like Thanksgiving week, Christmas, and New Year's, because that's basically 3 weeks of reduced productivity, so plan accordingly. Next, let's talk about expense management. And expense management typically gets tricky in Q4. Things like holiday bonuses, team events, annual software renewals all create spikes in your expenses. So make sure that your runway calculations factor in these spikes in expenses. Now, the one rarely discussed Q4 strategy piece are tax strategy moves, and I find that Q4 is a prime time for tax strategy and planning. Things like accelerating business expense if you're profitable are things to consider. Equipment purchases, software prepayments, and consulting things are other things to think about. Get them in before December 31st. Development expenses can also finally be expensed instead of amortized thanks to the updated tax bill. Finally, let's talk about protecting your cash flow. Cash flow protection is critical going into the holidays. We all know that customers tend to pay slower in November and December. You want to plan for it. I've seen startups with great revenue still struggle with cash flow timing. Keep in mind that your revenue recognition timing is crucial to stay on top of. So let me just talk about how we typically do our Q4 planning with our clients. Our first section of our planning revenue assumptions are typically factoring in holiday adjustments. The second section is typically factoring in hiring and expense timelines. You're going to map out every planned hire and major expense. This third section is typically a 13-week cash flow forecast. I love forecasts. And 13 weeks helps you to go through to Q1 of 2026. And section 4 is typically future scenario planning, thinking about best case, likely case, and worst case. Like, what happens if sales slow down by 20%? Last year, we had a client with a great Q3. They planned aggressive Q4 hiring, but we ran the numbers and we found if Q4 was down by 15%, they would run out of money in February. So we helped them restructure their plan, delay 2 hires until January, and this helped them build a cash buffer. Good thing, because Q4 sales were actually 20% below plan due to a big client delay. But because we planned a little conservatively, they finished Q4 strong, and they had the cash to capitalize on the next year's quarter of opportunities. So Q4 done right sets you up for an amazing 2026. Q4 done wrong leaves you scrambling in July. Now, if you're raising capital for your startup, I've made a how to raise your Series A with confidence checklist, and it's free to download if you click the link below in the description box. If you want to help or want me to help or need some assistance building your Q4 plan, let's book a consultation. I would love to help you make sure that your numbers work for you as hard as you do for them. Feel free to click the button below to subscribe for more founder-focused financial advice, and here's to getting through 2025 strong.